Oh, there we go. Yeah. First off, good morning, Jen Jen. That was the that last bit at the end was just the old like Twitch thing. Yeah, we're not going to talk about BNED. I didn't say BNED will mow ass. Let's just BNED's not a real stock, right? Wow. They're trying to DRS it, Renzer. They think it's the same Barnes and Noble that owned GME. They're they're stupid and bullish, and they're gonna ruin everything. Hey Greek, I'm thinking of picking up some positions in ETFs that are short long-term treasuries. Any thoughts? I was gonna look into NAV to figure out which ones. Okay, that's reasonable. Although financial conditions recently have been loosening, so you're gonna be. I mean, this those are gonna be moving against you a bit, at least initially. They did start to tighten a bit into the back half of last week, but not substantially. Someday we won't even know what they're talking about. That's the dream. Except that would also require that somehow they learned new things along the way, and that hasn't happened in a year and a half. It was like right around the time I left. Huh. Anyway. I was thinking I'd have to DCA in because of that risk. There you go. That's kind of smart. Look at you. Can you talk about the ultimate meme stock, Barrick? Okay, that's not real. Barrick is not the ultimate meme stock. It's a boring gold miner with moderate production numbers for first quarter 2024. The idiots are on to BNAD. Yeah. They started writing DD on Superstonk about it. It's as bad as you would imagine. They think it's somehow tied into Ryan Cohen's share offering. They think he spent $200 million buying it. Well, I sold like half of my shares on Friday, but I still have like 500 October options and then a bunch of free shares. Yeah, so I'm not even out and they're doing this to me. FFI is a pump and dump. It has nothing to do with Roaring Kitty. It's just spun up by bots on Reddit. Any value in buying it to loot money from super stockers? I mean, that's that's not cool. Also, if you weren't in it already, getting into it now is just super risky, right? Oh 07 RGT 019. What the fuck is that? As bad as the DDN DFV's memes in reverse. Fair, they don't have money anyway. That's true. BNED that showed up. Oh, that's just your subscription rights. So those will be exercisable for up to 17 shares at 5 cents a share. Okay, can I just start the stream with this? If the stock is under $5 and I haven't brought it up, I don't want to talk to you about it. Like if it's your stock and it's under $5, don't care. FFIE, various penny stocks that you guys for some reason feel comfortable asking me about, despite the intense amount of shame I usually dole out when anybody asks me about any penny stock. I don't know what kind of parasocial relationship you think we have here, but it's making me uncomfortable and I don't like it. I'll go over AMD. Now, if it's a 50-cent stock that I brought up, totally different. We can talk about it all day. Except BNED. I don't want to talk about BNED. What about GoEV? They're still telling everyone they're going to make money this year. So either they're lying, which is a distinct possibility, or they're telling the truth. Maple, welcome to Zillionaire. I think I missed one earlier too. Quit yelling. Both of you guys. Hit me up on the Discord after the stream if you need added to the country club. I will get you all set up. Thank you so much. I appreciate it. Can you take a look at grits for me? How's it looking? Hmm. Can you answer at least answer this? Are you interested in your subscription rights? Eh, I was until Superstock said they were gonna DRS BNED. ABNA. Welcome back, man. How you been? Thank you so much. Was the covering of Jimmy basically done last week, or could there be more continuation? All right. Everyone wants to just jump into the stocks. Not even a how are you? How was your weekend? Always how stock, never how Gherk. Shame. How are you? Don't talk about GMA. I'm sorry, Jen Jen. It's too late. How often do medical device companies start producing a product before they get FDA clearance? Frequently. You don't just stop your company because you're waiting on FDA clearance, right? You make a bunch of the medical device, and then when you don't get clearance, you get fucked and you try to liquidate what little you have left in order to pay off your debtors. So many feels in this stream. Where am I? I'm eating my leftover tacos, and yes, I put the tortillas in the toaster this time. You don't toast them. It's not. You put them in a warm pan and you heat them up a bit. Uh, I'm gonna pay for you to go to culinary school. You sound to be in a pretty good mood today. Sleep or fun doing that for you? Neither. I don't want to talk about my weekend. Didn't you have a friend experience a medical emergency last week? How are they doing? They're fine. The company's already gotten CSA clearance, which is why I wanted to ask. I'm not going to take the ticker since it's a penny stack and risky, and the FDA clearance hasn't been decided yet. I mean, that's it would just be bad practice to not start manufacturing the product if especially if you were ready to manufacture the product, right? Like because you want to start selling it immediately upon approval. So even if you don't get approved, you would still manufacture the product. And the bar for medical devices is super low. It is not hard to get a medical device approved. That's not like pharmaceuticals. How's your diet going? You mean energy drinks and the occasional meal? Okay. Some light kidney pain at night, but I think that'll go away. That's a lifestyle, not a diet. That's well, I mean, that's what you want. That's the best. The best diets become a lifestyle. But why, Poopy? Why are you such a fucking hick, man? Some farmer tell you they're buying a bunch of chemicals to dust their crops with, and you're trying to go long. It's a value buy. Well, it would be if they made money and stopped paying a dividend. An elastic, good bro. Hmm. Uh, is it though? Getting their operating expenses down. I do like that. Kind of cyclical. Hmm. I think it's too expensive. How's your coffee bean grinder calibration? Fantastic. I did have a little bit of trouble with a light wrist I got last week, but I dialed it in. Last night was wonderful in all your shirtless glory. You're welcome, Grim, too. I love that Poopy just keeps going. I'd stop chatting for a week if you asked me why I was such a hick. He's not embarrassed by it, he's proud of it. The P is too high. I don't know, maybe if they cut their fucking dividend, but it doesn't look like they're ever gonna do that, right? They've probably been paying it out for like 50 years. Alright, I'm gonna do memes. Do you mind going over Carvana as well? Yeah, I could check it out. It'll be called Much Worse by Better People. Fair enough. Alright, let's start with the one that everyone wants to talk about. And then we'll talk more about that later when Dork gets on. I'm just kidding. Alright, so let's see. GME closed Friday below Gamma Max. So Gamma Max is now above spot. Things are starting to return to normal. Um, we got about 600 billion in Delta falling off of the chain. About 2 million in Gamma. And hmm, about 100,000 in Vega. Charm moves slightly more positive. And there were some sold puts on Friday, probably at the $20 level. me take a look at this. The fuck? I would say a reduction in their dividend would probably be a good thing, Poopy. Either a reduction or just cut it. Like, cut it, handle some debt, put some money towards increasing cash flows. They don't look like a business that likes to do a lot of expansion. Ever. Ah, Jimmy, from ancient grudge, break to new mutiny. Such is life. All right. Let's take a look here. So we do have some sold puts at 20 and 21 kind of picking up. We should still have some stability here unless we fall below 16. And depending on if they've completed the share offering already or not, which they probably have, usually that's a very efficient process, but we may get some covering on the backside of that, right? If all of those shares are bought to cover short position or fill inventory, that could drive a little bit of a bounce. However, we would still need to get back above 25 and really 30 to have any kind of upside potential again. So, interesting. Yeah, I would say that Gamma's pretty supportive at price, but it's not very hard for us to drop to 20. If we fail over 20, we could drop to 16 pretty rapidly. So holding the $20 strike's pretty important. 25 and 30 to the upside would confirm or start to confirm a bullish breakout. And like 25 would start to confirm it, 30 would confirm it. There's some resistance between 25 and 30, however. As far as the options interest, obviously a lot of the weeklies and OPEX, a lot of the OPEX expiration falling off is not very bullish. But the stability on Friday did lead to some put selling, and so we may see another little tiny run because sold put delta is now roughly equivalent to where it was on the 15th. But that was a pretty good size spike. It went up from like 34 to 81%. So that's a pretty decent spike in sold puts. Charm is not positive going into the start of this week. Still negative. So the MM's kind of still selling into spot. Delta and gamma neutral are moving up. Enough volatility has fallen off that GME actually has a gamma neutral again. We are under gamma max. So, yeah, I would say there's potential for still a little bit of potential for a bounce, but it does look like most of the chain is bleeding off. So we'll see how effective the short puts are. They may or may not be, right? And we're definitely still getting plenty of sold calls, and any kind of hard upside resistance is going to lead to more of that call selling. and continue to drive implied volatility down. Speaking of implied volatility, yeah, the MM's pricing in about 35% over the week. So a range between $14 and $30. We did have a small spike in IV on Friday. Okay. Well, that might be kind of a little maybe bullish. I don't know what our low got to there. Hold on, let me check something else. I might have better data on my end instead of using that shit. So yeah, IV30 got down to about 226 on Friday's close, with historic volatility around 313. So that's usually not a good sign. We'll probably continue to see IV decline, and historic volatility will probably flatten out a bit. And then that'll probably start to come down afterwards. Kind of a little maybe bullish. Well, there's a small chance just because of the sold puts on Friday, especially the ones at the money. That we could see like a little bit of a move to the upside. So it looks like, I mean, there's a lot of sold calls at 22, but there's a pretty decent number of sold puts. Um, 30 and 40 are still very important, and then 15 and 10 to the downside. So if we lose, yeah, basically if we lose 16, this is probably all of this is probably over. We're gonna cycle down pretty hard, but yeah, a bit of support between like 16 and 20 and 15. And then to the upside, there's really just not much. There's some calls at 22 that aren't really very substantial. Then resistance at 25, and then resistance at 30. So there's some big gaps we got to kind of get over in order to get moving. And most of the delta is still kind of concentrated around like $12, $13. Yeah, and Charm isn't very supportive here either, with all the out of the money sold stuff. So yeah, not super bullish, but we could get like a small bounce in there somewhere as things continue to bleed off, and also again, depending on how much of that offering is used to cover positions. What was the thing you noticed on Friday about GME but wanted to dig into before you said anything? I might discuss that with Dork when he gets on, but I'm still not sure. And a lot of the options data that we have from pre 2020 is not, or like pre 2021 is not very robust, right? Like there's things we're missing from that historic data um that we normally track, and so it's hard to see, but there's a very distinct pattern that happened with GME's both of GME's earnings leading into the run in 20 well the run in January of 2021. And some of that's really similar to what happened between GME's quarter 4 earnings this year and this run, which would kind of imply that once this thing starts to wind up, um, it really needs to blow off a few times before they can get out of all of the positioning, especially with the amount of volume traded. Now remember, back then comparing the volume from back then to the volume now is a lot different, right? Because everything was split, right? So we're looking at the split adjusted volume. Um and so, we we technically had a lot more volume on the initial part of this run than we had, at any point back prior to Jan. Like, I mean, you can kind of look, right? If you go back here, that first big spike of volume. Hold on. What the fuck is this? Just old shit. That first big spike of volume that was kind of comparable to this came just after the September GME earnings, right? And then after the December earnings, that's when things really started to take off, and then volume ramped up. Jamie ran super fucking hard, came back down, ripped again in February because everybody was buying the dip, and there was a ton of obligations that had to be covered, right? And you know, we could definitely see something somewhat similar to that after a period of prolonged volatility crash. No, no crime. What? Why crime? The time to sell vol on Jimmy was when it was at 80. I'll go deeper into it when Dork gets on, and then I'll talk more about it. I'll do a write up again tonight. Um, and kind of cover the options chain and everything. Do you see AMD getting past 170? I'll go over AMD in a minute. Um, Upstart's run looks pretty dead. I don't think this is gonna get a second leg. It got plenty liquid. They're shorting it. I would say it's probably over, but it did get that test of 30 eventually, which was kind of nice. Fubo's getting shorted. Nothing interesting there. Tupperware might have some potential going into this week. It managed to not only break but hold above 2 on Friday. Um, Still looks like there's plenty of pressure on it. The only problem I have with this is it gets rug pulled really, really quick, but it may get a bit of a continuation this week. And they were selling the fuck out of the 250 strike on it on Friday, which may offer a little bit of a squeeze target if we're able to get over that level in the early part of this week. I'm not talking about FFIE. You should get a stock twits subscription or whatever the fuck that thing is called. Our short squeeze. That's probably where you want to hang out. Hmm. Yeah, Beyond doesn't look great. We might still see continued covering on it, but I think for the most part it's probably done until it goes back on reg show again, or cycles back onto reg show. GoEV has a little bit of potential to run after OPEX because it didn't really see any covering over the last week. I know a fairly significant number of the short calls fell off on it on Friday. was, yeah, like about 8 million, and Delta fell off, which I mean doesn't seem like a lot, but it's a $3 stock. Um, with a fairly small market cap. However, Gamma on it moved a little bit more negative. A lot of the negative charm fell off. Almost a million in negative charm. So yeah, a bunch of short calls falling off. Sold puts have been spiking really, really hard. Especially on Friday. We got a lot of sold puts coming in. And that, that could be a sign that this is setting up for some kind of OPEC's price movement. Although, if it doesn't get over 350, there's just simply not that much there for it to like squeeze off. Right, the open interest on the chain is relatively close to spot, so I don't expect it to like moon or anything, but it might be able to run to like 3 or 350. I think Gamma Max on it's at like 8, which is absurd. It's probably not going to go that high. But maybe a little bit of potential to get to like 4 if it gets the volume. Yeah, I've been selling a ton of CSPs too. So what you're saying is maybe we get a Feb-esque rip again? That's very possible. But options interest on GME needs to stay persistent, right? Um, and we need to get more put sellers here on the downside, which we started to do on Friday. That's a good sign, that put sellers are staying in and they're not getting shaken out. And remember that a lot of the open interest on GME below $20 is sold puts, right? So um, they're going to want to defend that positioning, and they're going to probably want to add to that positioning, right? And so, seeing those sold puts come in at 20, and 15, and even at like 25, right, in the money, is encouraging for another leg up or like a dead cat bounce, right? I bet some puts on ANF for Friday. Could you take a look at the Greeks for me? I might not have them. Nope. Maybe I have them here. Nope. BNED, BNED, BNED. All right. So as many of you know, BNED ran like almost 300% on Friday towards the end of the day. It appears that not only has there been a significant amount of buying in the underlying, but there also seems to be maybe some kind of buyout interest. Um, so Greenhaven filed, said it acquired a 9.9% stake in the company and intends to have discussions with Barnes and Noble management and members of the board regarding business strategies, capitalizations, and operational issues. Greenhaven and Outerbridge presented the board with a preliminary non-binding recapitalization offer of 84.5 million, and that's what drove Barnes and Noble to or BNED to create the alternative action or alternative transaction committee, and attempt to get financing on their own. Yeah, they didn't go for the offer. And largely that's what like the credit facility and the current share offering are intended to avoid, right? Is taking on the recapitalization offer. Isn't BNED kind of a prime target to take over hostily via their debt? Yes. Yeah, that's accurate. Anyway, so big run on Friday. Obviously, lots of buying. I think we hit 73.5 million volume with a high of 60 cents. Remember that none of the share offering has actually been completed, right? And so none of that additional liquidity has been brought to bear. Where's my pen? Oh, there it is. Right. And so all of the shorting that has gone on since they adopted that poison pill has not been covered, right? And at these prices, those shorts are going to be feeling quite a lot of pressure. So this was in response to the share offering and the poison pill, and now prices almost mean reverted back to the prior price levels around 60 to 80 cents, and that's going to put a lot of pressure on all the shorts that accumulated through the last like month or so. And those may get squeezed out, especially if there's the chance that BNED gets bought out or taken over before they're able to issue the shares, right? Because then the pool of liquidity that shorts were banking on to exit their positions could get pulled back. Do you think the development with BNED will change the .05 share offering or reverse split? It could. Yeah. So it's interesting. Super Stonk has already realized that computer share is involved, um, and have started spinning up wild conspiracy theories surrounding the stock. And a bunch of them have stated their desire to buy and DRS BNED, which is disgusting. But hopefully it runs before they can ruin it. If BNED makes you rich, Girk, I'll be a pigeon whale. I don't know how much you have, but I hope it does. BNED liquidity is in the obligations warehouse. How high could it go? Um, if the shorts squeeze off, it could probably run. I don't know, maybe there's a lot of short calls at 50 cents and at $1. So, I mean, it could squeeze, right? I mean, it could at least squeeze out the short calls, which I don't know. I mean, it could run to like $1 or two even, which is crazy, but it could. So far, the 50 cent calls have held strong, right? Like we barely broke through them before Friday's close, and then immediately got shorted back down. So there's a chance that the 50 cent calls are able to hold. And if they do, I mean, then this is probably already the top of the run. I mean, it's 300% is ridiculous, right? But if the shorts that were in, at 15 cents get squeezed out, then yeah, we'll just have to see. We'll have to see, how much volume we start getting Monday. If it keeps running, then yeah, it's got a little bit of range. I quit my toxic corporate job, paid a stranger to tell me about stock things, bought a bunch of random penny stocks of dreams of riches. Am I adulting correctly? Well, you're adulting. I'll tell you that much. All right. I think we can start to jump into the Mag 7 real quick. All right. Let's see. We'll start off with Apple. We get all the data I need pulled up. Five-hour BNAD stream. I'm not. What? Why would I stream BNAD for 5 hours? All right, so Apple managed to push up into the 190 level this week. A little bit of Delta falling off, Delta and Gamma falling off on the expiration. Charm held positive, but dropped pretty significantly on Friday's close. A little bit of the bot call Delta fell off. This still looks pretty stable. 190 might be a major resistance to the upside. However, I think there's still a pretty good ramp in place up to 195. So I'm going to continue selling puts on this. But I may go a little bit further out of the money just because indexes looked kind of weak into the back half of last week. So maybe I'll target like the 85, under the 85 level. That way there's a little bit of support at 85. And as far as time on that, maybe like 14 DTE. Let me see how that looks. I'm sorry, bull put spreads. Did I say that? Bull put spreads. 85. That is not as attractive as I would want it to be. I have to do like 87, 50, 85. Oh, the yield's starting to get really shitty there. 16% on risk for 1 week out. So maybe 12 DTE, 87, 50, 85. Looks kind of attractive. 24% return on risk. I don't mind that. And then if it moves up hard, you'll be able to close them. I'd be able to close them early by like Wednesday or Thursday. if it breaks out above the 195 level, which it could. It's starting to pick up interest at 200. It's just that the transition from 195 to 200 is still kind of weak. However, yeah, it looks bullish. I mean, you could theoretically you could try to just go long, and the returns might be better on the long side. With like a bull call spread, like buy the 190, sell the 200. Um, yeah, the returns for the equivalent price movement look a lot more promising on that. So I would actually say that maybe I won't sell the puts, or if I do, I'll sell the puts like a little further out of the money. Maybe I'll do the 85, 82, 50, and then I'll buy the 190, 200 debit spread. And then that should be pretty decent for like a continuation here, right? And a move up to that kind of like 195 test up here. If it broke back through 87.50, I would probably risk off. Let's see. AMD. So I'm still long AMD, but about 50% of the original position. Um, it's been struggling a little bit getting out above 65. And Nvidia, the earnings this week definitely present a lot of risk for a continuation. If, obviously, if Nvidia does well, the outcome's kind of questionable. Like broadly, semiconductor ETFs will do well, but as as a competitor to Nvidia, however small, Nvidia's success could be viewed bearishly in terms of AMD, right? So I would say Nvidia earnings present at least a moderate amount of risk, but um, there is still a ton of call interest at the 170 level, and even after 170, a pretty decent continuation up to 180. So the chain is, effectively stacked. The is still pretty supportive. Charm remained positive through the expiration. There do seem to be like a continued but much slower increase in sold puts. Um, Dealer delta didn't fall off very much. Most of those calls on the chain have a little bit of theta on them, and gamma is still positive. If AMD were to lose 160, however, things could get pretty bearish pretty quick. So, not a good place to enter a position on this. But if you're already in one, it may be worth it to continue to hold and see if it can break and hold above 165 and start pushing into the 170 level. We do already have two tests, or two attempts at a test, but it's possible that we still get more. Is it a holiday on Monday? Not that I'm aware of. Next Monday is Memorial Day. It's on the 27th, isn't it? Okay, yeah. Thoughts on going long into Nvidia's earnings and cutting before? Yeah, we did that last week. we, Me and Jafra spent like 45 minutes talking about how awesome it would be to go long Nvidia before their earnings. I mean, I'll go over Nvidia here in a minute, but Nvidia is getting a bit overbought. I don't know if any of you guys sold the condors on Amazon last week, but it looks like those performed pretty fucking well given that the stock barely did anything all week. Everything here is still supportive. Charm's positive. Call interest has mostly been unwavering. Um, a little bit of delta fell off at the expiration, but not a ton. Gamma's still positive. If anything, a few short puts are dropping off, so it may continue this like little downtrend a bit longer, but I would say the 85 strike is still quite supportive here. And even if it were to lose the 85 strike, it's probably going to regain it. Gamma Max is still way out at like 206, although I don't really think that's very important. Let me see one more thing. I want to check. Yeah, I mean, there's still a pretty decent ramp from spot back to a retest at 190 or 195. So I would say if this could break up above the 85 level and hold in the early part of this week, it may be worth a long position to play the 190, 195 test, but um, the bull put positioning still looks pretty safe for now, at least. Not excessively bearish. Even though we might lose like the 8250 level, we'd probably regain it and bounce back to 85 before falling further. So if you could sell the 8250 on a test, right? And then buy back on a retest of 85, that could be pretty advantageous. If it breaks up above 85 and holds, then the 190 test becomes very likely, and that would be a good opportunity to go long. But still moderately bullish, kind of grindy. Google finally hit my price target from a couple weeks ago, although it did fucking take forever. I ended up closing that out a little early for less profits, but it still went okay. But does it still look bullish or like it's going to continue? I'll do golds. Yeah, gold is one, and then Carvana is another one people are asking about. All right, let's see. Google Gamma Max is at 180. It's pretty unlikely to cross that. I think I've only ever seen Google cross Gamma Max like once. A little bit of delta and gamma falling off at the expiration. Short puts seem to be closing. Charms falling back negative, and bought calls have been falling off a bit. So this might form a top here, and could be a good call selling opportunity out above Gamma Max, which again is at 180. I wouldn't say it's worth playing the downside, but it may be worth playing this topping out around the 180 level. If you have time, can you look at FSLR? Okay. I'm just trying to get through the Mag 7 kind of quickly. Meta did not look very interesting. Not a lot of big changes there. Still just kind of choppy. I guess dealer net delta fell negative on Friday. But not bearish unless it gets under 452. Short puts are increasing a little bit, and bot calls have been falling off for like 3 days. So this may form another bottom around the 165, 160, 250 level. and then stabilize there. I don't think it's going to completely fail, but some of the changes in the options chain are a little bit bearish, and I do think that this that's been forming for some time now finally failed on Thursday, Friday. So, guess we could go try to make it not so ridiculous. Yeah, I would say a failure of 70 could see a test at 62. So this might be a little bit bearish. Probably not worth playing though. There's no major levels here. I'll cover cat. So yeah, I would probably just avoid meta. I think Microsoft's pretty much in the same basket. It doesn't look very good, bullish or bearish. It's well supported by the despite a pretty large drop in bot call interest. That might not matter. Um, this is a big expiration for Microsoft, but Charm is still fairly positive. There's plenty of sold puts. Delta's positive. Gamma is starting to decline. So Microsoft may be finding a top here over the longer time frame, and then we may see a failure back towards like the 395 400 level. But this may take a while, right? Like just because the options chain is breaking down doesn't mean that interest in the underlying is. And so it could take a while to bleed off. And some of this might also be linked to like NVIDIA's earnings as well, right? Microsoft CapEx for their AI compute spend was way up. If NVIDIA is really outperforming there, then it may be considered kind of bearish for Microsoft that they're going to have to give NVIDIA a bunch more money over the coming months. And that might be why we're starting to see some of that longer dated options interest pull back. Israel claiming the Iranian president is dead. Okay. Oh, I like a little bit of geopolitical risk with my Sundays. Netflix. Netflix, I think, is topping out here around 624. I was long, not all of this upside move, but some of it. It was pretty good, but not very stable. Netflix Delta has been falling off really rapidly, and bot call interest just cratered over the last fucking like 6 days. So I would say that Netflix is probably forming a top here. This could be either a good opportunity to sell some covered calls or possibly plan out a longer dated short position. I'll dig into that one a little bit more tonight. I do love losing money shorting Netflix. So yeah, I'll look into that one a little bit deeper, but it's starting to look kind of bearish. NVIDIA. So NVIDIA rejected the Gamma Max test. But it does have earnings coming up, and so IV is still fairly elevated, although not as elevated as it was at the prior earnings. I think right now, sorry, this chain takes forever to load. Someday we'll get there. Ah, there it is. Okay, so not a lot of support in NVIDIA at 920, a little bit, but a loss of 920 could see it fall back to 900. I think the MM's only pricing in a 3.6% move for today, but 8% over the course of this week. Looks like Gamma, yeah, Gamma will slide a bit if it falls under 920. That would be kind of bearish. And then a loss of 900 could see it fall. $852 almost. Jesus. Really flat gamma to the downside. Yeah, support at 880. There's like a huge put wall at 880. Yeah, so if Nvidia loses 920, 900, and if it loses 900, 880. If it loses 880, 820. Quite a lot of downside range there. Not a ton of range to the upside. If it breaks out back above 930, it could get another 950 test. But it would appear that a lot of the options interest that has been stabilizing it is falling off, and a ton of delta came off with the OPEX expiration as well as supportive charm. So a lot of what drove this most recent test of Gamma Max was short dated and has now fallen off. So we'll have to see if more options interest comes in to support it tomorrow. But I would say right now it looks kind of bearish. Sold calls at 40, sold calls at 920, sold calls at 900 and 880. So quite a lot of room for us to fall back, and in between those strikes, very little interest. Interesting. Well, that'll be fun to play. Kind of a harder rejection off of Gamma Max. Yeah, losing 900 also sees charm turn negative. So it's in a pretty dangerous spot here. What day's earnings this week? It's on Wednesday. Looks like everyone's just taking advantage of the earnings IV to sell as many calls as feasibly possible. How many more circular deals do you think Nvidia can do to juice its earnings? I don't know. Maybe at least one more quarter. If they miss, it'll tank though, right? And I think everybody's scared of that now, right? With the macroeconomic situation being a little worse, and the cyclicality of Nvidia's business model starting to approach the end of that upcycle. People are going to get a little bit more skittish with their long positions on Nvidia. Thanks, Thunder. You can always watch it later. You have to tell me it's a bad idea, but what are you going to say? Respectfully, they could probably pump AI for another quarter to make earnings. Yeah, I don't disagree. I think there's a definite possibility Nvidia meets expectations this quarter, but that capex spend is starting to wind down, and it's going to be a lot harder for them to continue to post the numbers they're posting currently moving forward, right? Um, Eventually you've sold everybody in H100, and there's simply no more buyers. And this, I mean, that's That's the semiconductor market. It's just what happens. Nvidia will miss, but has a $200 billion buyout backed by H100 loans. They don't have $200 billion in cash. Do you think QQQ straddles for May 28th, bought at close, is a good way to play Nvidia earnings? It could be, depending on how. I mean, there's going to be risk premium priced into QQQ due to Nvidia's earnings, but it may be a way to play it. Yeah, I mean, if Nvidia misses, we're probably going to leg down. If Nvidia beats, we'll probably leg up. Right? That's been true for the last like 3 quarters as far as Nvidia earnings have single-handedly saved us from several market corrections. So yeah, I would say it's not a bad play. I would maybe get some theta on it so that whatever direction the market takes, you can capitalize on the persistence of that move instead of just being like zero DTE for the next day, right? Where things might just be netting out before a larger move is made. B100s are slated for October. If they smell blood, they may sell pre orders to keep it up longer. Yeah, I don't think any company that just spent billions on H100s is going to be buying a lot of B100s. Happy Sunday, chillin'. Do you see any OPEX bullishness for EPAM? No, it's not like an OPEX stock. I'm bullish on it because they've moved most of their operations out of Ukraine already. And they fucking haven't missed on earnings in like a decade. I think the market's reaction to them lowering guidance slightly was ridiculous. So I'm quite bullish on EPAM right now. I think they're gonna be just fine. Area Shadow, oh, welcome to there. Thank you so much, man. Hit me up on the Discord. I'll get you added to the country club after the stream, man. CoreWeave committed 7.5 billy. Whatever. EMVX looks like it could OPEX run this week. We'll see. Tesla is next up. Tesla's been very choppy in this range between gamma and delta neutral, and it's had a hard time getting a foothold since the last bullish push on it got crushed out. I would say right now it's still holding above delta neutral, but charm is negative. Delta neutral is at 171. Gamma neutral at 174. So it did close slightly above gamma neutral on Friday. And while this should give it a little bit of lift, there's simply not enough positioning at the money to drive that much positive price action. And I think it's more than likely we could just fall back to delta neutral again and just keep chopping. Um, I think overall the biggest problem with Tesla right now is that there's just no one's really playing anything on it. It seems like most of the positioning that's come in has just been like effectively short strangles, which is doing a good job crushing vol, but it's not really doing a lot to move the share price very much. Um, Let me check one thing here. Boop. Yeah, so there's a little bit of call interest to the upside. If it breaks 80, it might be able to get a little bit of a run behind it. 85, maybe 90. However, if it loses 77 again, it's just going to fall right back to 170. And there's still a shitload of like out of the money puts 65, 60, 55, 50, right? So um plenty of puts there ready to capture any significant drop in price. Um, and just not that much bullish positioning. Yeah, and above 180, 185, there's really not much. So I don't know. It's choppy. You could probably target something long short, but I don't think it's really worth it. And selling condors on Tesla seems like a terrible fucking idea given how news sensitive it is. So I don't particularly like this for anything. If it lost 170, which it hasn't done in a little while, but if it lost 170, I might get kind of bearish on it. I think it's more of just like a wait and see how positioning continues to accumulate kind of scenario. China stocks looking good. Greeks on Baba. Uh, so China did post some good numbers last week. They'll have their 1 in 5 year lending facility decisions tonight, which will obviously have a very big impact. Baba is currently trading above Gamma Max though at 88. Um, I don't know. I probably wouldn't want to go long Baba right now. It doesn't look like that move is very well supported by the options chain, but it does have some support. I would expect that it'll probably get a little bit of a turnaround before moving higher. Okay, so ENVX. Well, let me go over Cat. Cat did finally break back above my risk level at 355 on Friday. I picked up some 55-65 debit spreads for this week. Um, it is looking a little bit. The fuck is this? That doesn't work on this stack. Um, Although I did lose a decent chunk of delta. Some of that may have been on the sold puts. Yeah. So pretty fat chunk of sold puts falling off. Call delta hasn't picked up a ton, but there are some more sold puts coming in over the last 2 days. Gamma's still positive, and closing above gamma neutrals at 348, which we kind of bounced off of. We slipped it, but bounced off of it. Yeah, I think Cat looks pretty good still. I mean, I don't see any reason it can't run up. There are sold calls at 360 and 370, but we have a pretty decent ramp to the upside into those, and squeezing those off could facilitate a larger move. So I think Cat looks bullish still. It's been a little rough on its recovery, but it's still recovering after the larger index correction. And I would say 70, maybe even 80 in the longer run is still possible. Also, Dow is like Dow and producer manufacturing have lagged a little bit anyway. Now that the John Deere shit is over, that effect should also be out of the way. So I think it'll probably recover back to like where we were Wednesday, and then try to push higher into those sold calls over the rest of the week. So still long. Gonna stay long Cat for a little while here at least. ENVX. Ew. I don't know what it's gonna do, but I wouldn't touch this piece of shit at all, ever. And I have no data on it. So China stock's looking good. Cybertruck, SPX 2800. Oh yeah, end phase. Hmm. The biggest problem with end phase is that financing costs are still quite high, and we're not seeing any significant rejections in well, as far as like financial conditions loosening, right? Do I not have that? I guess I have it over here. A little bit of a call ramp is building to the upside on end phase 15, 20, 25. Although the total call interest there doesn't look very strong. It is supported at 110. Um, Gamma and Delta are both positive. Gamma max is at about 130. A little build of Delta and Gamma falling off with the expiration. Um, yeah, so this may just be caught between uh like Delta neutral and an actual upside move for 111, 110. Yeah, so support at 111, 110, resistance at 115. If it breaks above 115, it could run a little bit, but I don't know if it's worth playing. The major strikes 115, 120, 125 are really strong, but all the strikes in between have very little interest. Carvana. So I've still been selling bear calls on Carvana over the last couple of weeks now. The out of the money one's doing good. The out of the money one's kind of bleeding a little bit with all the chop, but the premiums are awesome. So let's see here. Still hasn't slipped below gamma neutral, which is at 112. Um, but like Delta and Gamma have both been falling off of the chain pretty steadily since earnings. It's been supported pretty well by sold puts that came in, but I think those are starting to close out as well. Bot calls have declined over the last couple of days pretty steeply, and only Gamma still remains positive. Charm also moved negative after Friday's close, so I'll have the pushing down a little bit more into the start of this week, and we may start to see it finally lose this level and fail a bit. But I would still keep a sharp eye on like the 111, 110 level. Crossing that, I plan to go actually short versus just selling theta against it. There's almost no interest in selling puts up here anymore. Like there was a lot of put selling post earnings, but that's kind of dwindling a bit. FSLR. Let's see how much data I have on that. May not have anything. Oh, I do. FSLR below gamma neutral on Friday's close. Looks kind of bullish. Let me see something. Oh, here, I'll pull up the price chart. It's been a long time since I've shorted FSLR. This could be fun. Still got a pretty decent ramp on it out to 5210. Kind of breaks down around that level, but interest could fill in and it could go quite a bit higher. There's a shitload of out of the money calls on this. Their earnings have been pretty decent. I wouldn't go short on this right now. It looks pretty good. If it breaks, yeah, if it breaks to 10 to the upside, it's gonna get kind of squeezy. This does not look bearish, Poopy. There is a shitload of long dated call interest up here. And to the downside, it's not particularly bearish till it falls down to like the 170 level. And currently supported by a decent number of sold puts at 185. A lot of sold puts at 185. Longer dated ones too. Yeah, this looks kind of bullish. I mean, hard to get from 210 to 220, but if it got to 220, it could run to like 300. I might go long FSLR here. I know it's stupid with financial conditions where they're at, but that's very tempting. Yeah, I discussed Cat just a few minutes ago. Burry went long FSLR too. Interesting. Well, it's not just the 250. Like the 250 is nice, but the 220 and 30, 220 and 30 are huge. There's so much fucking delta to the upside if this keeps moving. And the only real resistance to that is like 200. So if it doesn't fail 200, I think it's just going to keep going up. All right, let's see what Dork's up to because I'm like 20 minutes late to talk to him. What's up, Dork? How's your butt?
So, Mom, I gotta call you back, but just don't forget to tell the doctor that I did put it in my butt. Okay. All right. Yeah, I love you too. Okay. Bye. Hey, Girk, what's up?
What's up, man? What a great mom.
I know she's awesome. I feel like I could talk to her about anything, and it's just so nice. How you doing, bud?
Doing all right, man. How are you?
I'm good. Just neck deep in solving problems. Cranking soft goods and looking at numbers.
Dude, FSLR, Poopy just had me look at this. FSLR is gonna fucking squeeze if it breaks 220.
Yeah, is the chain fucking stacked?
It is stacked to the tits. It's like
Ooh.
from 210 all the way out to like 300, 310. Just fucking massive walls of calls.
Oh shit! No way.
Yeah.
Well, that's exciting.
I think I'm gonna go long FSLR. The options are still cheap.
I mean, yeah,
it's gonna be my hedge that everything's fine for another 6 months.
that's a good one. Yeah, no, I'd have to look into it, but certainly sounds appealing.
The September 250s are $5.
Really?
Yeah,
That's not bad.
that's not bad. Especially if they go
Mm.
$50 in the money.
just because we've discussed this, I hope you know now. On Monday, they're going to gap up to like $9,
Yeah, yeah, of course.
and then it's going to squeeze, of course. uh, it would literally squeeze if that happened. If IV rocketed on those contracts, those calls, which are probably short, would be boned.
There's so much Vega at 220, 230. Even 200. Like, yeah, it's disgusting.
Wow. Do they have earnings soon?
Good question. No, not for a little while. Not till July 25th.
Oh, okay, so it sounds like we've got some time.
Yeah.
Got some time. All right. I might look into a little bit of this. It doesn't sound like it's going to squeeze tomorrow though, so that's kind of nice.
Poopy almost pulled an AJ on this. He wanted to go short at 180.
Oh, yeah, no, I'm interested. I'll look into some stuff, but that's definitely something to look at, you know. If it does break like 205 though, yeah, that would be I mean the time for waiting is probably going to shorten, you know.
They were struggling a lot meeting their like ramping up their manufacturing capacity. That's why I shorted them way back when, right? Um the last time they were trading above like 200. But then like uh they should also be having some issues with the credit conditions right now. I mean, financing's still tight.
Yeah, I mean, really, it's and plus with solar too. I mean, solar panels are a deflationary asset, right? Just
Yeah,
like TV.
yeah.
So that's really like in terms of, and that's not necessarily like a going concern because I mean, all they need to do is just make sure their volume scales, right? So I don't hate it. Solar to me is a great pathway to, you know, sustainable energy. I don't know about green, but sustainable for sure. So like, I don't hate the idea of a long term hold, but in terms of short term play, this it's much more attractive for that. Long term, I mean, you know, you could allocate like 1% of your your portfolio to something like this, and that'd be what I would consider appropriate. Uh, but
Tariffs on
as this may
Chinese
go on.
panels, yeah, that's part of it. But
Oh, that's right. Yeah,
yeah,
yeah.
but the issue, so the issue that FSLR had before that's still unresolved is that they haven't massively ramped up their manufacturing capacity. Now they're supposed to, right? They did get one more facility in, I think it was, what was it, like Ohio in 2023, which is why I stopped shorting them. And I think that was like mid 2023, first half, somewhere around there. It was closer to the middle of the year, but they do have like another manufacturing facility planned for 2025, which is not open yet. But once that opens, then yeah, they're gonna kill it. But like I was never like bearish on the company. I was just bearish on their ability to meet their outsized demand, which was correct. That's in a little bit better place now, but it's still not a problem that's completely resolved. Like they're still going to end up with like a significant amount of back order, which is difficult for their revenues, right? Because if you're not, even if you have every panel you make for the next 10 years booked out, if it's going to take you 10 years to get that panel into that customer's hands, it's a problem, right? They
It
also
is.
had a material issue with some of the Chinese side tariffs on because Enphase. So this is the fun part. Enphase makes a certain type of solar panel, and FSLR makes another one. and one of them requires more rare earth metals, and I think it's FSLRs that requires more rare earth metals, and I think one of those is like gallium. But maybe no, you know what? Maybe that's N phase that has that problem. I'm trying to remember. I have all of this shit written down somewhere. It's just been a while since I've looked at it.
FSLR's call chain is, or just its chain in general, is kind of cramped to the upside. There's not a lot of room up there to position.
No.
And I mean, like the June 25 310s are going for what, $10? Yeah, this thing is I mean, and who wants to sell that, right? Like at that far out, you're right. You're so exposed.
Yeah.
Holy shit, dude, that's crazy. Those are so expensive.
So I think
Dang.
I know we should be talking about macro, and I can't go too long today, but I do think we should discuss a little bit about GME. Obviously, it's been a long time since any of us have really given a shit, and maybe we should have been paying more attention. But it does look like short vol's well positioned. They're pushing down on the price. Um, but interestingly, like Friday, bunch more sold puts coming in, right? So we're seeing sold puts ramp up again. I don't think we're done bouncing around, and some of those bounces could be pretty dramatic if they clear $34. But I mean, what are your like feelings, thoughts?
Well, GME was really interesting. I honestly, at this point, where to close, $20 or so, something like that.
Yeah, it was like
So
21:30 and after hours, I think.
yeah, so I mean, it's hard to say without like all the weeklies that closed. They opened up the chain, and a ton of weeklies closed out of the money, right? So I think what remains to be seen is how that all settles out by Tuesday or Wednesday.
Yeah,
Uh, and if we do get an OPEX event, then I mean, that sort of the one of it kind of tells me two things, right? One, that what happened on the chain was a bunch of short calls were used, right? Which
oh
they
yeah,
were.
yeah, heavily. They sold every out of the money short call they could get their fucking hands on.
Yeah. So if it that should be interesting to see play out in terms of the settlement of the hedge, and then after that, right? What the next thing I'd be looking for is the FTDs.
Yeah, yeah. Well, I'm very interested in seeing if this is enough juice to reignite the cycles, right? Because it should be, frankly. There's definitely more than enough leap interest that came in as people kept trying to buy the top of the chain, right? And that's gonna just over the next several months mean that Gimi is going to be carrying more total delta, right? Which means active fund flow is going to drive more churn, more volume, more FTDs, right? And that's all the stuff that brings the cycles back. So that aspect of it's really cool. Although I will say currently I'm more focused on the short term. I assume that the majority, if not the entirety of the offering was probably complete as of Friday, right? Jeffries generally doesn't waste a lot of time. Those things aren't bled out, right? They want to maximize commission over the shortest period of time possible, especially on something that's falling, right?
Oh yeah.
And so, but the interesting part about that is MMs have really depleted inventories right now. Everyone's going to be like, right now, that liquidity is highly in demand.
Oh yeah. With all that volume
And
that turns through, yeah,
yeah,
5 million shares is not a ton.
it's 45 million shares.
45 million shares.
Yeah.
Oh shit. Well, then that is a ton, but not
It,
enough.
I mean, it's only 16% of, yeah, it's only 16% of the float though. And I think as all of that gets bought up, we're probably going to get another upside move on the back of that liquidity hitting the market. Um,
Yeah, 100%.
yeah, and it does look like short puts came in at like 20 and 25, so someone's still selling in the money short puts. Um, and that's probably a pretty bullish sign, especially because they're being sold in size. That's going to drive implied volatility up quite a lot if we make that move from 20 to 25. And then that's where like that Vega, like after, if we can move from 25 to 30, that's where that Vega starts getting exposed again, and this can like run off one more time. Probably not as high as the prior high, but a decent run, because that's a very similar situation to Feb, right? Feb 21, on a much smaller scale, but the mechanics of it are almost identical.
Yeah, for sure.
And then all of those short calls are going to want to close while we're low, and that's also going to drive the to pick up more delta.
Well, it comes down to like the short calls, right? I mean, if you know this cycle, I mean, you really wouldn't close them on that second run. You would just sell more of them
Yeah, yeah.
and you just keep doing that until until volatility is effectively crushed, and then you would start slowly closing things out, or they would probably be expiring by the time this is all resolved, kind
Well,
of
the
like what
thing
happened
is
in
if they
2022.
if they leave them on the chain, then they're gonna get hedged on the run up, right? Which is gonna create even more vol.
Well, if people lose interest though, then you could just keep selling more and more calls until
Yeah,
just
yeah.
keep keep adding shit onto the chain until it's pretty much dead, and then at that point you just kind of don't care anymore, right? You just and every time it runs up, you do that because you get the big spurt, right? And then the morons stampede in and do whatever they're going to do, and then you sell a shit ton of calls into their faces, and then they do it again, and you just keep doing it, and it can be profitable, but there is a ton of risk there, right? Like if it actually the more you do that, the more risk of a short squeeze compounds. But they're gonna. I have a feeling that what was used to short the volatility on GME was nowhere near the total, dry powder that there is to manage that stock with.
Yeah, I agree. But I will say that that kind of setup is, even though we saw, everybody was focused on the back half of that setup, right? Like post Jan 2021 and what happened in Feb and May, well, May into June, and then August, November, as those positions bled off over the rest of the year, right? But not a lot of people have paid attention. I mean, we have, but and a few other people have, but not a lot of people have paid attention to the pre sneeze period on GME. And there's something that one of the DFE videos got me thinking about, and I know, tinfoil, but um, if you look at GME's most recent earnings, right, we didn't get any kind of liquidity event following the quarter four earnings, right? It failed to meet expectations and it got shorted really hard, but that was also on the back of a cycle of shorting, right? So the short interest on GME, both synthetic and in the underlying, was significantly more compounded going into this period than it had been at any prior period since like March of 2022, right? So if you remember, after Freg's Day, we just tanked, right? And then beginning of July, we had that weird XRT runoff over in the overnight session where GME ran like 100% overnight and then just crashed back by market open the next day. And then that gave them enough liquidity to push all of that covering out into March, right? Um, and this was really similar to that, except, obviously we didn't fall nearly as much, but the amount of liquidity needed to short the price down at the levels it was already at was really significant, right? Because you get less of a decline in price per dollar spent for each short position, right? When the price has already been, kind of over leveraged to the downside. And what's interesting about that is that the earnings periods, both September and December, leading into Jan of 2021, we saw a similar effect. We saw like the earnings get shorted really hard, and then the earnings shorts got blown up, right? Because people just kept buying. And Cohen was buying, and we were getting, activist investors, and we were getting a lot of institutional buying in the underlying, and that kept blowing up all these little short positions that kept coming in, and so the number of failures began to just skyrocket. Right, our fail to volume ratio just kept climbing and climbing and climbing and climbing, because every time a short position would move in, it would get blown up. And this happened all the way from October, like, well, September of 2022, out through the big run in January, right? And where we're set up now, and with the amount of short puts on the chain that we have now, um, it's very possible that we could get a repeat of that scenario, because we still don't have a lot of strikes open on the chain. So you have to go really far out to sell that vol, which, while yeah, it gives you a good strong leverage against vol, that comes with the risk of taking on significantly more Vega exposure, right? It's not like they can sell, $100 weekly to try to drive the price down. They've got to go out further on the chain, and this is what kept compounding going into like the big Vana squeeze in January of 2021, is they kept having to sell all of these like leap contracts in order to crush vol at like IV10, right? Which is terrible. Like, it's a terrible position to be in. But like but the OCC doesn't open. They don't open those new strikes fast enough, and this is still a problem, and something they never fixed, with all of the redundancy that they built in, in order to prevent these short squeezes, or, well, vol squeezes, right? Um, they still never fixed that issue, right? It's not like the OCC just came out and they're like, okay, every strike up to 500 is open now, which is what they should have done, right? And that would effectively allow them to short vol from a very safe, far out of the money position with very little Vega exposure, right? But instead, they have to like sell the January 2025 100 strike, which opens them up to a ton of Vega exposure if IV moves up, especially if they're selling it in size. And there's like replicating baskets of like 150, 200,000 contracts, right? When those are Vega, like when the Vega exposure for those ticks up, whoo, um, it's fucking intense, right? And so, if we do start moderating here and we bounce back up again, and we squeeze out the 25s and the 30s and the 34s again, they're right back in that same position. Except this time the move may not be big enough to open up more strikes, right? So then they've got to again increase Vega exposure, and again and again and again, until it's primed to squeeze, and then everybody with leverage and capital is going to come after them, just like 2021, right?
Oh yeah, yeah. Definitely there is a setup here, right? For it's like a boxing match, right? You line up the hit and then you go for it, right? There's definitely the vol shorts are in a vulnerable position right now. At
Very,
least,
very.
yeah, based on what's available on the chain and where IV is at. Yeah, it's a dangerous game to play, and you know it begs the question, right? Like, why continue to short vol and not just get out, right? Well, it's not so easy when you have essentially infinite risk to the upside of volatility.
Yeah.
So
Yeah.
they got caught with their pants down super hard when it ran hella hard that one day. And so now they were just hosed, right? At that point, you're instantly hosed.
Show up late one time and you guys can't help yourselves. You're talking about memes. I've
I
been here
mean,
for like 20 minutes and you guys have been rambling on about the same thing over and over again. I can't do it. Jimmy's...
is this your official resignation? Let me get a piece of paper.
GME's been shorted by selling calls, which is the only thing you can really do. You can't buy puts.
Yeah.
The end, right? I mean, if people come in and try to pump it, then yeah, they could squeeze out. If they don't, then they won't. Probably not going to happen for another couple months. It seems like they sold out until like the end of some, the back half of summer and further. Yeah, that's all there's to say about that. Maybe it'll squeeze in a couple months. We'll see. Maybe it won't.
Might just squeeze Monday.
Hmm.
You know.
Okay. Yeah. Let's go with that.
Yeah, I mean, for me, it's more interesting in the way that the expiring options force them into positions that are not inherently beneficial to what they're trying to accomplish, right? Like the positioning of the open strikes on the chain makes them sell an inordinate amount of Vega in order to crush vol. And that leaves them very, very exposed to increases in implied volatility, right?
Yep.
Which is
I mean,
literally what drove the squeeze in 2021, and they're positioned like that now. And I mean, yeah, I think it's coming down. Yes, they've got a handle on it at the moment. But it's not like if that handle, like, if they're unable to contain it currently, it can run far more than like a usual OPEX would, for instance, right? Because that Vega exposure ramps up so fast to the upside, and they really can't do anything about it except wait it out, right? Because they've got to wait to, like, I mean, ideally the best thing they can do is ensure that those positions expire out of the money, because if they ever try to close them, they're just going to drive vol up again, right, and expose themselves.
yes.
Which is what happened with the Jan 2022 leaps all through 2021. So
That
anyway,
could happen again or not. I mean,
yeah,
you look
yeah.
at the volume on GME, and it is not what it once was.
No, it's not. But it's high. I mean, we had some.
Yeah, it was a big little bumperoony there on
Yeah.
what was it? Friday? It was pretty big on the way down.
Definitely nothing compared to Jan of 2021, but very close to the period leading up into Jan of 2021. And I'm thinking, like, what was it that DFE, like, sure, like, there's a million different reasons DFE could have started posting again, but my hunch is that he just saw something on the chain that was reminiscent of the pre 2021 squeeze, right?
Do we even know if it's him?
No, but I mean, it probably is, right?
I don't know. Maybe.
Hanlon's razor. You think he sold it to Kenny?
I mean, somebody could have just hacked it.
But for that long without him recovering the account?
Maybe he doesn't care.
Well, who would go through the effort of making that hang in there fucking spectrogram drawing?
somebody trying to pump the stock and pretend like they're DFE.
I guess so. But that's a ton of effort to just do that. That's a
Yeah.
whole lot of effort to go through.
Yeah, but I mean, JFresh has one point here. There were billions and billions of dollars to be made.
That's true.
So, but yeah, I highly doubt it's anyone else. Yes, we can call that into question, but it seems unlikely.
Maybe, yeah. Something to consider. I just know that the people that tend to listen to this stuff, they're going to take anything that even remotely sounds like GME might go up in the near future, and they're just going to YOLO their life savings into it, and then we're going to have to hear about it for a year.
True, that's true.
That's what I'm just trying to counteract here. I'm not trying to just be an asshole just for the sake of being an asshole, although I do enjoy that exercise. Don't be stupid. Nobody can predict the future. It's definitely the biggest difference here is there's a lot of bag holders. And I think the fact that computer share, whatever it's called, I think the fact that it went down like right as the squeeze was starting is not necessarily a good sign. There's a lot of people that would love to have tried to get out, and I think the fact that it dropped so quickly, like in 2 days later, so like the next day when it kept going up, it was like, okay, maybe there's something to it. But then like the following day and then after that, it just did nothing but go straight down. I mean, that could be a sign that computer share teed up all the orders, and then those orders started to hit the tape.
Yeah.
Those later. And
Although,
if that's true, then it's highly unlikely it's going to do what you want it to in the future because everybody's just bailing.
I am far more bullish on GME with less shares DRS. Because that takes the short vols risk mitigation off the table, and it makes positioning unpredictable again, right? I mean, it's great when you can see all of retail order flow coming in. And you can time it based on all of the orders being processed in batches twice a month, and you know exactly where they're going to buy. It's a whole nother story when retail's kind of opaque, and they can just buy calls and blow up your short calls, right? And I mean, fewer people in DRS definitely changes the risk approach, both probably from the and any participants interested in pumping or dumping the stock, right?
Yeah.
Although the sad thing, I think, is that most people aren't selling out of DRS. They're probably going to stick with that, and even, I mean, most of Superstock that's still in Superstock was probably buying on this run more than they were selling.
They might have been. Although it's been weird, they've been publishing the same number for DRS for like 3 quarters. Haven't I heard? Is that correct?
Something like that. Yeah, it's been flat.
It's like the exact same number.
I think more they're more likely to lose confidence based off of Cohen diluting and pushing their goal of locking the float further down the road, right?
It's all but impossible at this point. I mean, like now that he's sold 54 million shares.
Well, he hasn't sold them. It's just a shelf offer, right?
45. No,
45
it was placed with Jeffries already. I wouldn't doubt if it's not complete by now.
So I now that the super stonkers have been given, what is that, like a $250 million increase in the amount of shares they need to buy?
900
million. Yeah, they need to go scrounge up $1 billion to lock the float real quick. That's all.
They weren't even halfway there before.
It's gonna be hard for a Reddit sub of 800 people.
Yeah, I don't know. Unless they're really
wait, hold on. There's like 200 of those are bots.
I actually have all of the all of the crazy theories that happen on that website. I don't think that there were that many bots. I think that people were just dumb.
Isn't
Anyway,
XRT puts just the easy play here? Could be. Could be a decent play. Sell XRT calls is probably the better one, but I mean,
hasn't XRT been flopping around like plus or minus 4% at least once a week? Like it'll go up and down 4%. Like, I don't want to. I wouldn't sell.
XRT has been intensely bullish for like the last 6 months, which has
It's been crazy volatile.
yeah.
I don't know. I'm just that's another thing I'm just waiting on all of the IWM and XRT bulls to get destroyed in the latter half of the year when rates don't come down. I do not understand the long thesis on that at all.
On which?
Other than rates go down.
No.
Small caps.
Yeah, that's the only long-term thesis. I mean,
But
we've
so many
gotten
trying to pump that thesis. It's ridiculous.
We've gotten consecutively awful consumer sentiment reports for like a month and a half now. Retail debt is sky high. Delinquencies on credit cards and auto loans and mortgages are all ramping up, right? And yet XRT is the highest it's been since 2021.
Yeah.
Like if they got tested 80 this week, it's just fucking nuts.
Bad news is good news, you know?
It's just absurd.
I've
This
been
is
waiting for
all
that.
bullish. God damn it, Popcorn. Why do you have to be so right? Wouldn't full
just in
port
a-
Carvana 2D2Ds after it breaks gamma neutral? I'm not shorting it until it breaks below gamma neutral.
Or you do what I do, which is you get contracts that have a delta of as close to zero as possible, as far out as possible.
Are you buying Jan 2026 $20 puts?
That's correct.
You know what I love about
those are
this
going to be
bubble?
great when it goes to zero.
I know, right? That's what I'm saying.
This bubble is poetic in a number of ways, but the way that I think it is the most poetic is if you've looked at the Aladdin meme that I've been just absolutely posting everywhere and spamming as hard as I can because I think it's so clever.
You're welcome for that meme.
I know. Thank you for suggesting that. The meme is basically, Aladdin and Jasmine flying on the magic carpet and looking up at the sky and in jubilee of such great things to come. And it was it's a meme about money on the sidelines, and it shows on Jasmine's face is a graph. And on the graph, the x-axis is time. It goes back to like the 1950s. And the y-axis is a ratio. On top is private ownership, or I guess private wealth stored in housing and equities, divided by household wealth stored in money and debt securities, aka bonds. And you can see in 2000, it peaked at like 350%, something like that. So basically saying that households had 350% of their wealth relative to money and bonds was, equities and housing, aka a bubble. Yeah. In 2008, they double topped right at exactly the same place, like 350%. And then now we're basically triple topping right at 350%. The data is 3 months old because it's published quarterly by the Fed, but we're like right there. And I'm sure with 10 to 15% we gained since that data probably gets us right to that triple top. So we're right back into a bubble the size of 2000 and 2008. The beautiful part about it is that in 2000 it was an equities bubble. Like housing wasn't super crazy; it was mostly equities. In 2008, it was a housing bubble.
Now it's
equities
both.
Equities were kind of high, but not super bad. It was all kind of in housing. This time we we nailed it. We like Goldilocks and the Three Bears. We got the just right bear. It's like half housing and half equity. So nobody can like point and say, well, equities aren't where they used to be, so there's still more room to run on equities. And people are like, well, housing's unaffordable, but it's not as crazy as 2008, so we're not where we used to be. But it's because we've just threaded that needle so perfectly, so nobody sees it. But yeah, we're right up there in a big fat bubble.
It's pretty cool.
It makes I think it's just beautiful. Like it's everybody's missing it.
That's the soft landing.
Distributed.
But it drives me crazy. Oh my gosh, there's so many bad theories going around on Twitter right now. But one of I posted that in response to money on the sidelines. Like, there's less money on the sidelines to dump into equities and housing than there has ever been, save for the two biggest bubbles in the history of the world. So I don't know where all this money on the sidelines is that people claim exists.
Well, home equity is the sidelines, don't you know?
Yeah, sure.
Well,
Bro,
I mean,
equity,
you
home
have
is a
that
savings account,
you've
bro.
had that contingent of people on Twitter for like 6 months now that think that money and money market funds is somehow super liquid and just gonna come pop into equities at any moment, which is ridiculous, right? But
It's also ridiculous just in concept, because you can't store money in an equity. So for every buyer, there's a seller who's taking your money and putting it where?
in a money market fund.
In a money market fund or a
Yeah.
bond, right? That's why I added both of those into the denominator.
Yeah, no, it's silly too, and you know, the thing is if you see a huge outflow from money market funds, that's not bullish. That's actually incredibly bad.
Yeah, that would be terrible. I mean, that would mean that well, it would probably mean that, everyone's
Credit crunch.
moving. Yeah, it's a credit crunch. Everyone's going to move out further into longer dated securities, right?
Well, I
Yeah,
mean, moving out of a money market fund, I mean, that's the only thing more liquid than a money market is money itself.
exactly. That's why
So
it'd be a liquidity
if
crunch.
people are pulling out of the money market, that would imply that people have been people are now they have distaste for bonds at any duration.
Or they needed the cash.
Yeah, which would be super bad.
Yeah, it would
Because at
be.
least the money market tells you that people like the short duration stuff.
Yeah, they don't. There's no urgency for that, actual cash, right? Which money market. So money markets are still interchangeable with cash. But if that changes, yeah, or you see money market flowing out, and you don't see a massive steepening of the yield curve, then that tells you something really bad is happening, right? If you see
You just wanted to say steepening. God damn it.
I did, yeah, I absolutely did. But if you see an unsteepening of the yield curve with the money market outflows, that's really, really, really bad. That means we have a liquidity crisis on our hands.
Dork 24 for 24 weeks talking about steepening.
I had to do it.
You guys stated that housing was essentially an inflation vehicle last weekend. Can that single-handedly crush inflation enough, or does it just stay there as paper value? So if you housing acts as
Crush
a
inflation.
yeah, it acts as a like a sink. Like, think of like a carbon sink, right? If you're trying to sequester carbon. Um Sequestering inflation is similar, and you can sequester inflation into housing. It doesn't get rid of the inflation, but it kind of locks it away in the value of that home.
Yeah,
It turns inflation into a quote unquote wealth effect.
Yeah.
Housing too is calculated using owner's equivalent rent, right? So there's that whole aspect of it as well. So you may not see the effect of housing on inflation it has a lagged effect is really all that means, right?
Yeah,
But
because I mean,
yeah,
what housing
increased
goes
home
up like
ownership and increased home supply reduces, I mean, it reduces housing cost and like housing cost inflation, right? Like shelter specifically. And so yes, it does, it can act, if we were to have a large influx of inventory, it could act as a means of defeating part of the inflation we're experiencing, but not all of it. Sorry, Jay Fresh.
no, you're good.
I was just trying to get that through that thought.
I'm just looking at the percent change of housing over time, uh, median sale price, and yeah, like back in the 70s, it was like 10% a year.
I posted
And
a great chart on like how much of home value is inflation on my Twitter.
yeah, and in the 80s, it was uh, like 6% a year. Then we kind of dropped in the 90s a little bit. Uh, but through most of the 90s, it was still at like 5% ish a year. And then obviously when we got to the bubble, it was going up like 15% a year. Then it popped, but then it like reinflated right back up. Uh, yeah, so I mean, I think in the long run, I mean, housing prices going up in aggregate 6% a year or more. Uh, Probably inflation.
Well, yeah, I mean,
Yeah,
so another effect of that that I guess we didn't really touch on last week is that as the housing inventory turns over more and more, less and less inflation is sequestered into the price of those homes, right? So like if you buy a house from somebody who's had it for 30 years, a ton of the value in that home for that person is inflation, like most of the value of that home at current market prices. But if you buy a house off somebody who bought a house in 2022, not there hasn't been enough time for any inflation to have been sequestered there, right? And then if you're buying that house for more than they bought that house for, especially if it's significantly more than like 6%, for instance, then you are actually housing starts to become additive to inflation, which is something we have now, right? Because the housing inventory is rolling over so quickly, we're getting a lot of additive inflation from the housing market versus the housing market sequestering inflation for 15, 20, 30 years.
Yeah, that's true. Yeah.
And so until people buy and hold their houses and they stop treating them like a short-term investment vehicle, the housing market is going to continue to be additive to inflation. And that's not something the Fed can stop, because there will always be cash buyers that want to continue to roll these over. So the only way to fix that is exactly what I proposed, which is that the government needs to subsidize a surplus in housing that exceeds what the market can bear, which means they need to crush home prices. And they probably, I mean, regardless of which side of the aisle,
wonder how they could possibly do that though. Maybe selling some of their MBS loans that they have.
I mean, they can just fund it through congressional spending, right? I mean, we're already increasing the deficit. They could fund it through like privatized home builders. We don't have to do it like the New Deal, right? We don't have to have like government employees going out and building homes, but we could fund it, and that way we stimulate some growth off the back of that spending. But largely the federal government should probably finance those homes to people as well, in order to collect the excessively high interest rate over the next 30 years, which I also went into. But I mean, that's really the solution. I don't think we'll ever get to that solution, unfortunately, because our government is awful. But um, yeah, I mean, otherwise, there's no stopping it, right? It's just going to keep spiraling until um, no one can afford to live anywhere and everyone's homeless, or we start killing rich people.
I mean, at
Let's
that
go with
point,
the
they'd be
let's go with the
killing
let's go with the
country.
homeless thing.
Yeah, everyone's
Yeah,
going to be homeless, and
I
everyone with
mean,
a home is going to
we,
have
we we
military.
potentially could solve inflation through more deficit spending if we spend it the right way. But it requires legislation that no one will want to agree to, right? Because it would divest those who have held their homes for 30 years of their wealth
Yeah, I mean, I think
or their accumulated wealth.
I don't see how people are going to be homeless. I think they're going to be underhomed, and by underhomed, I mean they'll own less home than they would like to own. And I think there's an aspect of that that's inflationary as well, right? I mean, people want that extra 500 square feet that maybe they don't need, but uh, historically have been able to afford, or people around them have been able to afford, and so they want it.
I mean, I think
Because
I think I
there's
think
more
Japan. Go ahead.
there's more houses per person or domiciles per person in this country than at any other time in the last like 12 years. And so trying to argue that now at this moment we have a housing shortage is uncompelling to me, because you have to explain why we didn't have a housing shortage 6 years ago
You have more
when we
people who
actually had
own.
fewer houses.
You have more people who own more homes.
Well, I
Yeah,
mean, most
that's not a housing shortage. That is
most
Well,
economists would argue we've been in a housing
misappropriation.
shortage. Most economists agree we've been in a housing shortage for a long time. Like that's not a crazy idea, but pressure on
I
the
think it
pricing is
is
what
I think it
is
is a
new.
terrible narrative that's not very well supported by anything.
I don't the thing with the housing shortage though is just that yeah, there it wasn't an inflationary pressure because rates were so low, right? So we were able to get away without housing prices going to the moon, right? Because even though there weren't necessarily enough houses, right, people could afford like where they were at, and the liquidity for homes was really high because rates were so low. So you had much less impact of housing on inflation versus now, right? Your equivalent rent is going to the moon because interest rates are so high. And because interest rates are so high, nobody wants to sell a house, right? And the people who can afford to buy a house at these
But
rates
everybody's already
are,
living somewhere. It's not like we have a massive homelessness issue, right? And so people don't have the house they want. They have a house
well,
or a place
yeah,
to live.
they do, and they're not in any danger, right? It is so long as unemployment stays low, this whole like housing can continue to inflate so long as unemployment stays low. But
yeah.
So
as soon as
okay, so
unemployment takes off, we're
let me
exposed.
point out why I think that this whole line of argument has no basis in measure in any measurements. So we've been tracking housing inventory estimates uh, since about 2000, and um, if you divide, basically take housing per capita, how many houses per person, since 2000, it has oscillated in a perfect sine wave about pretty much 0.55 houses per person. So really, it's like 0.547. At the height of the housing bubble, it got all the way up to 0.558. It went up one bip. At the bottom of the housing crisis, it went down to 0.536, one bip from average. So, plus or minus, over the last 25 years, we've had just as many houses per person the whole time.
Okay, that data's flawed, right? So the problem with it is that it's your primary domicile, right? Usually it's based off of either the housing market statistics or off the IRS. Um, you have yeah, sure, half a house per person in aggregate, right? But you also have a significant chunk of the population that owns, you know, 30 or 40 other properties that they don't live in, right? That aren't considered their half a house. They're not even factored into that metric. They're for rent on Airbnb, right? And nobody can rent those in the rental market. Nobody can live in those. They spend the majority of their time vacant, except for short-term rentals, right? And that's what's not factored into that data, and that's a huge chunk of the total housing inventory. So there is a
There's a solution
shortage.
to that.
It's not. It's just that the shortage is not driven by a lack of supply. It's driven by increase in private inventories.
So
Yeah,
I don't
hoarding.
disagree with that at all, but I think that the solution to that is different than building a bunch of houses to try to crush that speculation.
Well, building
You
building a
just
bunch of
directly
houses is
crush that
something.
speculation.
Building a bunch
I
of
mean,
houses is something the government can effectively do,
they can
whereas
also just raise taxes on speculation on homes.
that's a lot harder. It's
I
easier to
mean,
it's easier to fund programs that do stuff and spend money and float private
well, I mean,
private
if we're
enterprise.
not willing to close the deficit, we're never going to solve inflation anyway. You can do whatever you want with trying to game housing. It's just going to flow somewhere else, right? Because the money is going to be spent. We consume, and we
We should
consume.
honestly like fixing cap rates on rental properties, short term and long term, based on the average duration of debt taken out on those. Uh, we could probably get away with something like that to reduce the incentive to rent.
Well, they
But
already do stuff like that, but people lie, right? I mean, they ask, "Is this your primary residence or not?" And people who are basically buying all these homes for cash flow are saying that all the homes are their private residence, and nobody's catching them.
I got in an
Nobody's.
argument with a bunch of Canadians about that the other night.
There's a ton of fraud in that. I mean, like
Yeah.
even the PPP loans too. Like back during COVID, they gave small businesses with payrolls. They gave them a bunch of loans to meet payroll. They never closed their business. They didn't need the loan, so they took the money. The money was forgiven, and they went and bought property with it.
yeah, I almost wanted to start a LLC of myself where I pay myself $1 and then ask for 500,000 in PPP loans that will get
Dude,
forgiven.
there were Uber drivers getting PPP loans because they were like independent contractors and then just like YOLOing GMA. I mean, uh
That's crazy.
everyone
So
and
I
their
mean,
mother got PPP loans. If you had a
yeah,
fucking
like
employer ID number, you got one.
I mean, a lot of the inflation and a lot of the inflation, especially in housing, is a product of fraud. So why don't we just counteract the fraud? There's plenty of houses. There's always been plenty of houses. There's
Well,
not a supply chain.
the
It's
only
it's
way to counter that fraud is to put risk back in the market by dumping the distressed MBS on the Fed's balance
Sure,
sheet.
that's one way to do it. Raise taxes on speculation.
yeah.
Raise taxes on foreign owners. Raise taxes on second, third, fourth homes plus. Right. Raise taxes on rental properties. It's pretty simple, right? It's pretty straightforward. There's just a lack of willingness and maybe a lack of understanding of the members of Congress to really understand that that's the issue. Because again, you've got all of these really smart economists saying we have a housing supply issue, right? When we don't. We have a house allocation misallocation issue because of speculation and fraud.
Yeah.
I think that is accurate, Jay Fresh.
I think I do think that
And here's another issue I have with your. Yeah, I don't know why we're fighting. I don't know why I chose to fight today. I think I'm just grumpy.
that's okay.
But
It's okay.
I take issue with let's build a bunch of houses also because
You
who's
own a
gonna buy
house.
all the houses? Well, no, I don't care about that. But who's gonna buy all the houses that exist now, right? We have long-term demographic issues as well.
Everyone, you make them cheap.
Our population is well. Then we're
Then
just
you
gonna
guarantee
fuel
the
more
financing.
speculation. We're just gonna fuel more.
No, you can't sell them.
More houses.
Can't sell them. Locked in for 30 years. Federal loan on a federal property. No way out. And it's like a student loan. You can't bankruptcy your way out of it.
Okay, maybe I'm not understanding all the nuances of this, but we already have arguably, unless our demographic, our population growth dramatically improves, we already actually have too many homes. And in 5 to 10 years, we're going to be asking the question, who's going to buy all these homes?
No one. They're just going to rot and sink into the ground.
Yeah, I think that Zoomers, if they do get cheap enough, right, we may just end up in a situation where single people own homes.
Yeah.
That's totally plausible in my mind. Where demand will meet supply is where a guy making money by himself doesn't need a second income and has no family. It's just like, yeah, I'll buy this house. I can afford it. Why not?
Like the 50s.
But that doesn't solve the issue because that will just exacerbate our population growth problem.
Not necessarily. It's just going to ebb and flow. I think that we are reaching, just on the really overly simplified differential equation, we're reaching a cap, and it could go up again, it could go down again. I don't think that's necessarily a bad thing when those sorts of things happen. We just have to learn to adapt to the new environment. And if a bunch of people want to live in homes, that's not going to mean they're never going to have kids. It's going to be more people to have kids than ever.
Number of houses per person is about one house per two people.
Yeah.
We need more than one child per person just to maintain our population. So we're already at that limit.
Yeah, but hold on. I guarantee that if me and Dork want to spend, a couple hours digging through Fred, we can prove that if single individuals own a home and get into a relationship, the number of cream pies that occurs will grow exponentially.
It's very true. I mean, if you think about it, Jay Fresh, no one wants to say it, but the problem with having a kid nowadays is affordability. I mean, and if housing, which is 40% of your income currently or more, right?
Everybody's saying that?
Well, yeah,
everybody our age is saying that anyway.
Economists aren't saying it, but
kids are so expensive. Yeah, and everybody makes.
How many kids did you have after you owned a property?
Well, one, but the other one we didn't know about until after we signed our mortgage. So does that count?
Yeah, that counts. Because you had a path to security, right?
Yeah, I guess.
So you had twice as many children as a property owner that you had as a indigent.
Well, I mean, and think about it this way.
We were also married, and it wasn't really.
Think about it this way, though. If you it would be like the 50s, like Eric said, because if a home is cheap enough to own as a single person, then that means that a single person can, maintain your status in the landed gentry, right?
I think you're understanding the point I'm making. If we're already at one home per every two people, we're already at that limit that you're talking about, where we're about at what the number would be for every adult to own their own home.
That's exactly what I said, and I think it's fine if we keep.
But we're already there.
Well,
the thing is, for 25 years.
No, you're discounting growth. I mean, for those ratios to remain constant with population going up, that means that homes are being built, right? And I don't think that that's a terrible ratio to have at 0.5. I think that's pretty healthy. And if that ratio ends up getting skewed one way or the other, right? You're going to see a drastic change in the housing environment, right? Like all of a sudden that ratio goes to like 0.75. Dude, like we are definitely going to have single people owning homes, and homes are going to be super duper ultra mega cheap.
At 0.5, that implies that single people already own homes.
No, because you have it technically doesn't, right? Because you have half a home for every person.
Right, but assuming that the population is staying constant, not even growing, just staying constant, if every adult or if every person owned a home and was responsible, had to be responsible for roughly one child, we're already at that point where one person owns a home.
Yeah, and and that goes exactly what I was saying about how that's not necessarily a bad thing. The only thing that's bad for is GDP growth, because we'll have to print that.
Yeah, I don't know. I mean, I just don't see the issue is fraud and speculation.
Yeah, I completely agree with that.
Because money is too easy, or has been too easy.
It has been too easy, and now everybody's locked into these, what they didn't consider highly risky investments that are actually highly risky, and no one wants to actually go and yank the rug out from under them. All these Airbnb folks, who may have purchased a property with like a 3 or 4% mortgage, they may be doing fine because they have people renting out the Airbnbs, but they're more likely doing not fine. And even worse, once again, if unemployment goes up, this whole thing it's a leveraged, because it is so highly speculative, it's a leveraged environment.
I mean, you look at what happened to Austin. They destroyed the local housing market for Austin. The people who actually live in Austin and work and recreate there.
And
The
put money
housing
in their
market,
economy.
the housing market got absolutely destroyed for those people during the fraud and speculation of the COVID PPP shit and the work from home, remote work. So all the Californians and stuff, they destroyed that market. But now we're at the point where the people who came in and ruined that market for the people who actually live in Austin, we're at the point where they're about to have their lunch taken away from them and given back to the people who it should have been for to begin with. And everybody is chomping at the bit to prevent that from happening and bail those assholes out. And I think that they need to eat it. They need to eat it hard.
Eating shit sandwiches is not the American way.
They need to take massive losses on that speculation in that town. The prices need to collapse, and then the locals need to buy those homes and live in them.
Well, I mean, when you say collapse, right? Like that is a very
they're already down what, like 17%? We're doing great. Keep going. Make it 50.
Yeah, okay. So where's the long-term trend for housing growth in that area, right? So you want it to fall back to the inflation adjusted, basically flat line, right? And where is that is the question. Okay, so you just want the housing market to literally burn into a crisp.
Yeah.
Yeah.
To allow the next generation to actually own those homes and use them for.
This is how we ensure our future, Dork.
Yeah.
Well, so the problem with if you burn the housing market to a crisp, right? Let's say like 80% drop in equity values, right? And then they just never recover. Who the fuck wants to actually buy a house?
Who cares?
I will. I'll buy a bunch of them.
Everybody has to live somewhere.
Man.
Either that.
This idea that a house is only worth buying because of how much of a good investment it is so backwards. Right?
Dork, how do you like this? I'll file for the LLC tomorrow. Me and you will just outcompete the housing market. We'll build shanty towns. We'll
wait, that's Lennar. We could just buy Lennar calls.
We'll plumb them. And then we'll just lower our rents 50% below the market average, and capitalism can flourish.
Ooh, now we're not Lennar anymore. Okay, now I like this again.
I would like to join this venture as well.
Oh, okay. You're welcome. Yeah, you're welcome. We need a board. Who's gonna take the notes?
Ooh,
Jay Fresh. Oh yeah, Ron could do it, but I want Jay Fresh to do something.
Okay.
Ron. No, I'm already the
Have an
secretary for my
LLC. Let's
HOA.
go. Dibs.
I'm already a secretary for my HOA of 116 homes. And I
Yeah,
can't
that's a
really-
ridiculous job. We can get you to quit that.
I know. Nobody
J
else
Fresh
wants
Shantytown HOA president.
Yeah.
It's like we noticed you've been leaving your needles in a bucket outside your unit, and if you could, we'd like that you cover that bucket. There's children around.
Yeah, I mean, get a sharps container. Be a decent human.
No, you want them to dump the bucket out onto the floor so that it reduces the property value even further, right? I thought that was the goal.
Ooh, no. We just dump the needle buckets in adjacent neighborhoods.
Oh, I see.
Yeah.
That's smart.
Come live here where your kids might pick up AIDS on the street.
No, that's the neighborhood.
No. That's not how you write the copy. You say, "Come live here where every day's an adventure."
There we go. It's an exciting opportunity.
So now that we've talked about housing and GME, is there anything else we need to talk about before we talk about the market?
Just the market.
All right.
I got to be out of here by like 3:20, so I don't have a lot of time.
Oh shoot, yeah, let's do it. Market. Nothing matters for like 2 weeks except for NVIDIA earnings this week, right?
NVIDIA earnings matters probably a lot. We do have a Powell speech today at 3:30. Actually, something that might matter quite a bit for financial conditions. China's prime loan rates for the 1 and 5 year lending facility decision is tonight. That could be kind of impactful. We also have the Fed minutes, which may not be as dovish as everyone expects. I think that might be about it. We got some home data this week, although that's not going to be very fun.
It's a real light week. So
Yeah.
NVIDIA is pretty much the only thing to care about.
Friday has durable goods, which will be important.
That could be another hot print everyone could ignore.
Yeah.
Um,
Couple auctions, nothing special. 10-year tips.
NVIDIA is. I'm going to make a prediction. I hope I'm wrong, but I think NVIDIA is going to beat and guide higher.
Okay.
And they're going to go over $1,000 a share.
All right.
Maybe 10, 20
Ooh.
or so. And the reason that I think that is because CoreWeave has raised a shitload of money, like $8 billion
for their AI compute.
To buy, yeah, because they're just a competitor to the big hyperscalers. They just buy chips and then put them in servers and rent them.
Yeah.
I don't know that they're making any money.
No.
I have seen evidence that supply and demand are coming into better balance, and it's no longer impossible to find compute on these chips. So, I think a $8 billion ramp seems aggressive, but all that money's going to get pumped right into NVIDIA's numbers. So, I mean, what are they expecting? 24 billion this quarter, or something like that? 26, 24, or something. I don't know what it is. So, a third of that coming from one shitty company, CoreWeave. So you can imagine with the CapEx that all the other people have said they're going to be doing. Tesla has said like 30 billion in CapEx or something crazy for H100s or I guess what they call H100 equivalents, whatever that means.
The cheapest chip that Elon can buy.
Probably. We know Microsoft and Google and all them and Meta are still buying. So I think it's very likely that they're going to beat again, and we'll probably. I don't see any reason why they wouldn't raise guidance going forward. If even a little baby like CoreWeave is raising $8 billion, they raised like $1 billion 1 week, and then here what they did was they did an equity, a cap raise for $1 billion, and then they turned around and did loans for $7 billion. So yeah. So with that, if Nvidia pops off, what do we think the rest of the market's gonna do? Up. There's nothing really. There's no real catalyst waiting in the wings to potentially knock us down. Um, Everybody's complacent. VIX just dropped a little bit below 12, which is always fun.
What about
People
Japan?
are.
Japan's a little wild card still.
I mean, we're nowhere near 160 on USD JPY. We're still at 155. So I don't think that's going to go to 160 this week. Let's see, M2's moving up, loans are moving, financial conditions are as good, if not better, than before they even started hiking. If I look at the options chain, it looks like we've got bunch of sold calls from 5,300 to 5,340, and then some long stuff up around, kind of centered around 5,350. And on the downside, we just have sold puts all the way down to like 5,200. And so, yeah, so I don't see.
All right, give me your
the-
predictions. I already did mine.
We're gonna go to 5,375 by the end of the week.
Straight line.
Straight line.
You bastard.
What did you do? I'm not looking at the screen.
That's okay.
You basically just you summarized his prediction.
What did he do?
No, I
The
didn't do
same
straight
thing.
line, but yeah.
you drew a line through his prediction.
Oh, sorry. Wait, what was your end price for the week?
Shit. The winner of last week?
No. What was your end price for this week, for this coming week?
Oh, 65.
Okay, so I'm a little higher than you.
Yeah.
I mean, I don't disagree. So, but I'm gonna have to do something a little different so that way I can try to win out statistically. So I'm gonna say open at 5,200, close at 5,300.
Open at 52.
Yeah. And then close the week at 53.
Okay, so flat.
Yes. Well, yeah.
Because nothing matters except for the last day, right? So you're predicting flat.
So this is your prediction? Just
That's correct.
Gap down and then okay. All right.
You guys, there's. I just because for the sake of not having a unanimous chart, which is super lame, I'm like, you know what? We'll do something kind of exciting.
Wouldn't a unanimous chart? Okay, all right, sure.
Yeah, I mean, I think there's still value in unanimous. If you feel the same way, just do it. We've never done it. Look, see what happens.
Yeah, why are we always competing with each other? We're supposed to be friends.
All right, fine. Then just match mine to J Fresh's, but I'm going to go $1 below Girk's prediction.
So 53.64.
Yeah. There we go. Yeah, that'll work. And then maybe just a little bit of flat in the middle of the week to make mine look a little different.
There you go.
There we go. Perfect. Yeah, I like it.
Get assholes.
I mean, it
Dude,
only
if we
sense.
close at exactly 53.66.19, you can both get fucked.
Well, its price is right, so I mean, if it goes below all of us, then no one wins.
True. All right. Looks good. Thank you guys for coming on. Appreciate the talk. Good stuff. For everybody, I'll have the write-ups out tonight. I'll get a write-up out for GME for you guys. And I'll have Pickle's picks up by, I don't know, 2 or 3 in the morning. Thank you all for tuning in. Thank you guys for joining in. Appreciate it. I'll see y'all later.
Thanks for having us, bud.
Yep. Always fun.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.